You're doing well today. It's Thursday. It's Friday, February 14th, and here for the live session. What we're going to do, as always, just simply walking through what's happening in the markets, giving you some information, ideas, thoughts around what's happening out there. Give you some trading ideas with it. Just simple stuff that works. Doesn't have to be super complicated to trade. It all comes down to mindset, finding a trading plan that we're happy with and sticking with it. That's what it's ultimately all about. So anyway, let's go ahead and get to it. We're going to get into first having a look at what's happening in the futures market. Sorry, I'm watching my screen over here. We just had some news here during the start of the U.S. session, and spreads are going kind of crazy over in the Forex side of things as we see spreads widening around that news event. Spreads widen during news just simply due to uncertainty. You've got orders that are coming off. Market makers trying to figure out where they want to be, but also pulling orders off so that they don't get caught out in some sort of a whip that might occur during a news event. And as a result, we just sorry, something again weird happened on my screen. Anyway, they're taking orders off the table around that news event so they don't get caught in any whip or maybe a change in sentiment that occurs. There's uncertainty, so they take orders off, and when orders come off, spreads widen. And just watching, it kind of caught my eye as we were starting the session with all the spreads going crazy on the charts over here just to see what was happening. But ultimately, we're going to start over here in the futures market, and then we'll roll from there and talk about some other things that are going on. So let me get this up over here, and we'll begin with this screen. Yep, this is the right one, and just start out as we normally do. Top left hand side, this is E-minis, 4-hour trend, solidly up. We're in an upward trend. We are kind of hitting our heads on this new all-time high over here. New all-time high is hanging out around 3380. What is that? 87? 3388 is our new all-time high over here. So, just like we said a few days ago when we had hit an all-time high around 3350 and then 3360, the question always comes, how much higher can it go? People have been asking that since 2000. You can absolutely go broke trying to figure out why the market's doing what it's doing and second guess it and come up with all these reasons that it should be doing something other than it's doing. Simplest thing is to trade with the trend. Easier said than done. I realize that. Brian, I've been hearing trade with the trend forever. I know. But it says it because it works. If we can get out of our own way, just stick with what's actually happening on the charts and not trying to read too much into what we hear in the news and what we see in the news and what we think about that, and come up with our bias around what direction we think the market should go, and just simply do whatever our trading method says to do, we'd be much better off. I think all of us can agree with that. If you don't, take some time to really step back, meditate, think about it, look realistically at the charts, and you'll see that what I'm saying is absolutely true. If you can just be honest with yourself, simple trading strategies work, and they work because they're duplicatable. They work because you can be consistent in their application. But that's the key, is you have to be consistent in their application, and that's where the mindset stuff comes in. And that's where the real practice comes in, right? So anyway, I'm getting off on a tangent. Let me just stay over here. So 4-hour trend is up. We've hit new all-time highs. Of course, with that, there always is the question of, will there be a pullback? Could there be a pullback? We just had some news here in the U.S. I haven't looked to see what it is. It was core retail sales and retail sales reports just came out. What does that mean to the market? I'm not even going to look at what the outcome is. I've mentioned that before. I try not to look because that forms bias and creates more bias, but it looks like it was negative for us right now, at least in off hours. Yesterday, coming into the session, was it yesterday? yesterday coming into the new session, we had seen this big move down. We asked, because during off hours trading, it's lighter volume. We said, what's the market going to do with it? Is it going to shrug it off and just continue back up like it had on Monday? And it did. It shrugged off, that virus news, which is what had driven this piece back here. It shrugged it off and moved to new all-time highs. So who knows what's really going to happen around this? This news came out before regular trading hours. Best thing to do is just wait and see what occurs there. If you're trading a breakout of some level, wait and see if it breaks below a key level, 3380. What's it going to do around 3380 once the new market session opens? Is it going to break below, close below this? And if it does, can we sell it on a retest, which is counter trend, by the way. It's a counter trend trade. Obviously the better opportunity would be to wait for it to pull back to a key level. And I shouldn't say better. That's subjective. If you're trading with the trend, which is the 4-hour trend is up, perhaps you'd rather wait until it comes back to a key level like the 3375 or 3365 area to buy off of those key levels and see where it goes from there. My cat doesn't like what I'm saying. He says we should all be going short. Anyway, over here on crude, I'd crack myself up. Over here on crude, we're still in a downward trend. The last couple of days, it has been pushing long off of that 50 level. It did find that bottom at 50 and is pushing long off of that bottom edge now. We're back up to 52. The trend, though, 4-hour trend, is still down. So you may be watching what's happening around 52 to look for selling opportunities, because if we're trading with the trend, coming back to a key level would give us that opportunity to sell on that pullback and trade with the trend. Now we have to watch that and see, if this ends up closing over and our 4-hour trend, our shorter term moving average crosses over this longer term moving average, then we may end up looking to find long trading opportunities. But for right now, the trend is still down. It is flattening out, but the trend is still down. Doesn't mean that just because this bounced off of 50, it's going to go back up to 60 or 65. We don't know where it's going to go. No one does. I don't care what anybody in the news tells you. They're absolutely lying if they tell you they know where it's going to go next. And I will say that to their face, because it's an absolute truth. No one knows where it's going to go next. No one does. So all we can do is trade what we're seeing here. The trend is down. If we're trading with the trend, we'd be selling off of this key level, which is the 52 level right here. Of course, on the shorter term trend is conflicting with the longer term trend. So depending on what your trading strategy is, maybe you say, hey, I'd rather wait until they're both in alignment one way or the other. If that's the case, then you don't trade it until you get confirmation on your shorter term trend that's in line with your long term trend. But there's so many ways to look at that, and we'll get. I need to find a way to do that for you guys, and pick maybe a strategy a week or something and just talk about it, because there's so many ways to dissect the market. Not any one way is the best way for everybody, and you've got to find the one that works best for you. But for me anyway, what I'd be watching here is looking for sellable opportunities off of this key level that are in line with that longer term trend. Here on gold, we're still in an upward trend on gold, both on the 4-hour and on the 30-minute. Gold is still pushing higher. I would expect, if we get a big pullback on the E-minis, I would expect to see gold push higher. Maybe, depending on how far this pulls back, if it pulls back, maybe seeing opportunity to reapproach these key levels over here at that 1586 or even 1600. But the big thing is what's happening here, and that's the big unknown, right? If risk is still on and the marketplace is still comfortable with buying into this rising market, then we could potentially see gold pull back again, and we'd be looking for opportunities as it pulls back to the 1575 area to look for buying opportunities. So we'll see what happens with gold. 1575 is the next 4-hour point. If it breaks below that, then your 1570, 1568 areas would be the next opportunity down there. So we'll see where that goes. Over in the Forex side of things, just watching here in Forex, as the morning got started, I'll pull this up and show you. So just trading a regular breakout strategy. As the morning started, so the U.S. session started at 0800 U.S. Eastern Time, we had divergence between the pound and the CAD. So the pound down here in red, the CAD up here in green. There was nice divergence occurring there between the pound and the CAD. Looking at that pound CAD chart, we can see that at that point it had moved 70 pips, and the average is anywhere from 118 to low of 107. It's been kind of quiet the last few days, right? So is there opportunity for it to move 20 pips on a breakout? We've moved 70. Could it get to 90? It's, how I look at that is, we had pretty good opportunity for it to potentially move the rest of the way on that trade. So put on a breakout trade here, just simply looking at what our strong currency, what our weak currency is, but also considering the fact that we have additional range still available to us. If it already moved 110 pips today and our average is 118 on a 30-day average, I wouldn't have taken the trade. I would have just left it as we did in previous days, right? We need to make sure the conditions are there and there's opportunity there for us. So went ahead and put that trade on, and currently this is where the trade currently is. So it broke through prior to news actually and pushed down pretty heavily. The pound had a really big spike down, and with that move it ratcheted off risk. So right now this trade is sitting at almost break even. It did push through here, and this is where you get the bid ask, right? If you don't have the ask line on and you're not seeing your bid and your ask, some people would look at this and go, hey, this pierced my take profit point, I should be out of that trade. What happened here? Well, what happened there was the ask line, which is where you'd be filled on this, was never triggered. So it came with probably a couple tenths of a pip, but didn't trigger in. From here, who knows what'll happen? We've still got the pound pushing the weakness, but anything can happen. This could reverse back and take me out for a near break-even trade. Small loss on this. We'll see. We don't know. We don't know where it's going to go from here. We can just simply apply a process that gives us a mathematical advantage over time. Why does this process work over the long term? It works because we've got a fixed take profit point that's equal to our initial stop point. So if we're risking 2% per trade, we've got a 2% win if it goes all the way and a potential 2% loss. However, whenever you take a trade, and that trade, you should be taking it based on momentum, number one. Number two, when that trade moves through the entry point, it ratchets off risk 1-to-1. So over time, when you look at this mathematically and you look at a large sample size, you're always losing on average less than you're winning, because you're winning 2% every time and you're losing some fraction of that every time. So your mathematical advantage works out because you have an average loser that's smaller than your average winner. From that point, you just simply have to be able to win. It's not even 50%. It's actually in the mid to low 40% range. Depending on what your win-loss ratio works out to, but you can actually have a sub 50% win rate and still be profitable over the long term. Does every trade win? Absolutely not. Absolutely not. But it gives you that opportunity, and it gives you that advantage as long as you're consistent with the application, as long as you're actually consistent and we're watching for that divergence and considering what else is happening on your charts. I use a time segmented volume down here, which allows me to see what direction we're moving in, also looking at the direction of the trend, and also considering how far something has already moved for the day, and if you've still got that, based on that current day's movement, given the consideration to what the average typically is, to see if you really have opportunity for that move to actually occur. Remember, in order to make money trading, we've got to have movement. We have to have movement in order to make money trading, but we've also got to have movement that's reasonable. So again, I love the ADR indicator because it allows me to see current range as it compares to the average. So I see something occurring on the chart, it looks good, but if we've already moved 115 pips and the average is 115, maybe not that opportunity to get the full 20. So I've spent more time on that than I need to. I think that makes sense for most of you. If you have questions, let me know. I'm going to show this, every day. We're going to come in and we're going to talk about a breakout strategy because I feel like it's a really effective tool. And it's effective in every market out there, by the way. It's not just effective in Forex. This strategy is effective in every market because it gives you that mathematical advantage, and that's what we're all looking for when we're trading. All right, next up. What else is going on over here? Let's roll over to talking about or having a look at the crypto market over here. Crypto. So yesterday we talked about Bitcoin, we talked about Ethereum. Both had a really nice big rally from Wednesday on, and Bitcoin crested a key level up here at 10,375. It broke it and then was rejected and has pulled back now to this next level down here. It hasn't quite gotten back to 10,000 to retest 10,000. Looks like we're hanging out around here at this around 10,200 area as support right now. So we'll see where it goes from here. Certainly could pull back more. I'd like to see it pull back to 10,000 or even a little bit below to be able to take additional trades long from there. But depending on what your strategy is, you might just be watching for breaks and say, hey, if this thing breaks again above 10,375, I'm going to look to buy it. I think it's, I have to be careful giving those definitive opinions on that. But trading with the trend is up. Look for long opportunities. I would say pullbacks. Looking for pullbacks. You're buying the pullback is a great way to go to get in at a little bit lower levels. However, again, I've mentioned that before too. Buying a pullback means you have to buy in a big red candle. That's tough to do. It's really tough for folks to do that. So, maybe look at breakouts. You could form breakout areas. You could look at the tops of these 4-hour candles right here at 10.3, 10.300. If it breaks above 10.300, maybe that's your next buying opportunity. And if it breaks down below 10.1, that's your selling opportunity. So you've got a couple of different ways you can come at this. Definitely trade it with caution. Either way you go, make sure you've got some stops in place and make sure you're considering what your overall risk is. Same over here on Ethereum. We had a really big push. We've run up to a high of 275 and it's repelled off of that. And right now we're kind of sitting in a range between 270 and down here at 260. So you could look at that range and say, hey, if this thing breaks back above 270 or even above 275, I'm going to look to buy, and if it breaks down below 260, I'll look to sell. Ethereum doesn't have a lot of stops. This thing really, once it repelled off of 220, it's just barreled on up, and we really have to go back quite a ways to find some additional areas that we could be watching. 260 to that 262 area we just talked about would be a support level for us down here. So potential opportunity, like we talked about before, using that breakout. Just watching where this 4-hour candle has kind of clustered here, and then parking your breakout trades on either side of that. Speaking of breakout trades, by the way, over in the members area, let me just get this up. Over here in the members area, I did put all the tools online. I've got some videos I recorded yesterday I need to put online for you as well, but you could use either if you're trading outside of the U.S. in IG markets and even some others, you have opportunity to trade crypto from your MT4 platform or even MT5, and you could utilize like the Advanced Breakout Manager over here, which is a trend line trade manager that would allow you to put your trades on in there. So check out that tools section and you'll see all the tools that are available for you. It's all for free right now if you're already registered in the members area. This weekend, by the way, I am going to lock this down and I'll send you all your passwords. So if you haven't registered, if you've just been kind of hanging out and lurking, this is the time to get registered, because I am going to lock all this stuff down. And once I lock it down, anyone that already got in gets all this stuff for free. Anyone that registers, after this weekend, this will be locked out, and it'll be a cost to access all of these tools. So just keep that in mind. It'll be a low cost, by the way. It's not going to be anything exorbitant. But at some point, in order for me to be able to support the tools, I need to charge for the tools. I'm not going to start doing support tickets for free again. Anyway, CrystalBot, just looking at that real quickly. Still rolling. It's certainly been performing. I sound like a broken record with this, but it's big for me to test things, and especially before something goes live. It is performing well. It's doing exactly what it should be doing. At this point, I didn't do the math this morning, but it should be up around 12% right now for the month so far, which is in line. Last month we finished at around 13%. I would expect if the market starts pulling back, I would expect to see this draw down a little bit. But the great thing about what the bot does is it caps the losses. When the market is drawing down, it's keeping the losses fairly small, which is exactly what any viable trading strategy should do. If we have manual strategies, we often tend to hold on for losses longer than we should, because we get tied to a direction or something. We get, I know the market should be going down, and it's going, violently up as it has, but we tend to hold positions. Or the other way, the market's going up and we think it should be going down, and we tend to hold on to those positions. Bots don't do that. Bots don't care. Bots don't have any presuppositions about what the market should be doing, right? They have their idea of what their trading strategy is, but as long as money management's built into that trading strategy, it manages it. I don't have up the neural network program that I've been looking at over the past week. This is the one I've been talking about that my buddy down in Austin, he's a programmer, has been working on for many, many years now. This one is one that I'm going to start talking about more. There's a Forex component and a crypto component, both in this neural network application. I mentioned yesterday that my one big drawback for it, especially on the hourly. On a daily time frame, it's no big deal. You can just go in each morning, click the button, have it update what it's looking at based on pattern recognition and what it's learned already, and it'll give you a trade signal: buy, sell, or hold. Right? On a daily level, that's no big deal. If you're trading on an intraday level, though, my biggest criticism of it was that I couldn't take the signals when I'm asleep, because I'm asleep. It's giving you a signal, but what can you do? I'm not going to be up at 24 hours a day. So I talked a little bit about this, and there is a way to integrate that into a broker account. So right now, we're going to pick one or two brokers and integrate it, and then he's going to give me an updated version where, from an intraday perspective, it can be doing its thing, making its calculations, doing what it needs to do, and then providing those signals into a specific broker. That way, it's operating and could potentially operate 24 hours as long as there's connectivity, right? Could potentially operate 24 hours, and you'd be able to take full advantage of those intraday trading opportunities. Right now, it really seems to be more of a daily, in its current rendition, for my comfort level anyway, it's more of a daily trading platform, which is fine. It's absolutely fine. Just a departure from what I'm used to. I want to be actively involved, but maybe it's good that I start stepping back and let things work in a little more calm and long-term manner. So anyway, we'll see. So that's coming. I'll be talking more about that next week once we get new versions and have that rolling. So that's everything. I think I've hit it all. Right now, coming back over to futures market, gold is seeing a little bit of a rally. We've still got 30 minutes before we're into regular trading hours, but gold's seeing a rally. The E-minis has pulled back, came right back down to the market open, or close. I guess it'd really be the close of yesterday's trading session, and it's repelled off of that and seems to be pulling back. But really, your main volume in the futures market is going to come in once the U.S. stock market's fully underway, especially here on the ES. And the ES and gold are very correlated. So I wouldn't make any trading decisions until that market is under regular trading hours and we really have the full breadth of trading behind us to see what it's going to do and really pick that direction. Again, long-term trend is up, so pulling back to key areas would be to buy would be the opportunity. I am still a little concerned. I do have a personal bias in the market around the coronavirus. I don't feel like the full impact of that is being realized. The market's just doing what the market's doing, which is good, right? Until we see real numbers and truly understand the impact or potential impact, everything up to that point is just hearsay. So the market's continuing in the direction it's been moving until there's actual data. So I don't think we're going to see a whole lot until we start getting data out. Now, putting on my tinfoil hat that my friends gave me, I do have my own personal opinions around that, just in talking to people both in China and people here in manufacturing businesses, even just here locally, that are builders and stuff that are already having trouble getting materials and components that they need for their business. I think there's going to be an impact when it comes to it, but again, that's my personal bias, but I don't think it's going to be seen until we actually see numbers coming out. We actually see how that impact is occurring and what the potential length of time is going to be for that. It's really hard to say. China's committed to pumping money to prop up their economy, just like our Fed is in our economy. They buy this shit. Well, anyway, I'm going to go down a rabbit hole about what's driving all this crazy stuff, and I don't need to do that. Leave it with what it is. I talked about tradable opportunities on futures. We talked about what we're looking at over here on Forex. In fact, talked about Forex, and we talked about what's happening in crypto. So there it is. Have a great day.